The value of Tesla is going to be total vehicles produced times the value of autonomy. That's a way to think about the future value of Tesla.
Hey, this is Warren Redlick. Battery Day was huge, huge. A 2030 stock price for Tesla of $20,000 a share or more, a $20 trillion or more market cap. This is a spectacular investment. All these things together mean owning Tesla stock, for me, and I think for long-term investors, is a great decision. It's a great investment. It comes down to this. It's huge growth. It's reduced cost per unit.
We have a plan to halve the cost per kilowatt hour.
And that adds up to monster profits. Some people missed it.
Best case for Battery Day was some news of some kind of imminent breakthrough in battery technology, and we did not get that. What we got was Elon Musk saying there are plans for a $25,000 car, perhaps within 3 years.
I don't know what that guy's talking about. I watched the whole thing. The $25,000 car in a few years was a tiny component of Battery Day story. And it was an extensive explanation of the radical changes in battery production and vehicle production that enable the rapid growth and the lower unit costs that I was just talking about.
We're talking about 100x growth in batteries for electric vehicles. And then on the grid side, 1,600 times growth from today's grid batteries.
People who don't want to see it aren't going to see it. If you want to believe Tesla is not going to succeed, then don't watch this video. But if you want to understand what Elon Musk and Drew Baglino and the Tesla team laid out for everyone on Battery Day, I'm going to set it out for you right here, right now. Let's go. Let's start with one simple thing that is really easy to understand. It isn't really about batteries so much, but really explains how much progress Tesla is making towards becoming much more profitable. It starts with factories. Tesla now has a factory in Fremont, California, and a factory in Shanghai, China. They are adding a factory in Berlin, Germany, and they're adding a factory in Austin, Texas. Having these factories in different locations means it dramatically lowers their cost of delivering products to customers near those factories. When the only production was in Fremont, California, and they needed to deliver a car to Europe, the car had to go all the way from California to Europe, usually through the Panama Canal. It took a long time and it cost a lot of money, and it delayed how long it took for Tesla to receive payment. Rapid expansion of factories is going to make a huge difference in Tesla's profitability. It's going to decrease how long a consumer has to wait to get their car. There are many benefits from this. Elon explains.
It's extremely important to tighten the supply chain and to have, from when parts arrive, put it into a car very quickly and deliver the car very quickly to the customer. And if you can do that inside the sort of your kind of payables timeline, then the faster you grow, the more cash you have. Or conversely, if you're unable to do it within your payables timeline, the faster you grow, the less money you will have, which is obviously bad. It's for a capital-intensive situation. So just tightening up and having the parts move very quickly to the factory, put it in a car, get it to a customer, makes a massive difference to cash flow generation. And I mean, that's why it's extremely important to have a factory in each continent. Because if you don't at least have a factory in the continent, it is impossible to achieve this. So having a factory in China that's able to serve China, and then soon many other countries in the region.
Many other countries in the region? That sounds like a lot of growth, doesn't it?
Will be key to us tightening that total sort of chain of cash flow and getting it. Essentially, the faster we grow, the more cash. This is really important.
Tesla's growth as a company has been constrained particularly by limits on battery production.
We do see the fundamental constraint as total cell production. That's why we're putting so much effort into making cells.
If they don't have enough batteries, they can't make more vehicles. If they don't have enough batteries, they can't make more grid storage. The more batteries they can produce or they can buy, the more products they can make, the more cars and the more grid storage they can make, and the more solar they can install with grid storage going along with it. So at Battery Day, Elon Musk and Drew Baglino's a key Tesla employee, they laid out a detailed plan for massively increasing battery production and lowering the cost of those batteries. This plan sets forth a path to grow at least 20x within 10 years while dramatically reducing the per unit cost of the things that they make, of the cars, of the grid storage. They propose to scale battery production up to 3 terawatt hours. Currently, they're producing less than or about 150 gigawatt hours. So from 150 to 3 terawatts, which is 3,000 gigawatts, that's a 20x increase in batteries from 2020 to 2030. That alone is a 20x increase. That doesn't include that they're going to get more out of each kilowatt hour of battery. That doesn't include that the cost per kilowatt hour is going to be dropping about 50%. So you add that all together, it's easily a 20x growth story, and I believe the 3 terawatt hours is an understatement. It's going to be more than 20x, with additional profit on top of that. This is a recipe for massive, massive profits. And that's before we even consider robo-taxi profits, which I will talk about later. Elon and Drew Baglino laid out a growth path, and I believe they understated the growth path. They talked about how each new battery factory would ultimately produce 1 terawatt hour of batteries per year.
What this translates to, based on what we know today, is about a 75% reduction in the investment per kilowatt hour. Basically 4 times better than the current state of the art to the best of our knowledge. I think there's probably room to improve even beyond that.
Definitely.
You can see, like, basically, we can get a terawatt hour in less space than it took to make a gigawatt hour. 150 gigawatt hours.
Each new battery factory they're going to build will cost less to build than the Nevada Gigafactory they already built. It will take up less space. It will cost less to build. They said by 2030 they'll be producing 3 terawatt hours of batteries a year. That would be 3 factories. Well, if it costs less to build them than the Nevada Gigafactory and they produce so much more, why would they only build 3 of them in a 10-year span? They mentioned at one point, I think Elon said, we're building factories faster.
We're expanding to Shanghai with the second phase. Berlin is making rapid progress. Texas is making even faster progress.
Building only 3 terafactories in the next 10 years is not building factories faster. I believe Tesla is actually going to build at least 10 terafactories in the next 10 years. And the real growth path is much bigger than they laid out. The real growth path is 50 to 100x in the next 10 years with higher profits. This is a monster growth path that they're lowballing what they're actually going to accomplish. They're under-promising and over-delivering. It's a change in how Tesla messages. In the Battery Day event, they revealed a lot of details about what they're doing to increase battery production and reduce cost per kilowatt hour of the batteries. I'm not going to get into those details here. That's going to be in another video. But one important detail here is, unlike others who talk about what they're doing, Tesla is not just in the prototype stage. In the prototype stage, you'd say, hey, I've got this battery. Look how awesome this battery is. Well, how many of you made? I made this one. Tesla said, Elon, I think it was Elon, maybe it was Drew, said they have already produced tens of thousands of these battery cells.
We're still ironing out the kinks, but we've made tens of thousands of cells, thousands of kilometers of electrode. This is not just a concept or a rendering. We're starting to ramp up manufacturing of these cells at our pilot 10 gigawatt hour production facility just around the corner.
That's 20,000 to 100,000 cells that they've already produced. That's not just the prototype stage. They're in the manufacturing stage. I think they said they're on version 3 or version 4 of their manufacturing process.
I mean, we are on the 4th generation of the equipment, so we've learned a lot along the way.
And they're iterating. They're revising their manufacturing process every 3 to 4 months. They have a pilot line for producing these cells in Fremont, California, next to their Fremont, California car factory, and they anticipate scaling that to producing 10 gigawatt hours a year. 10 gigawatt hours a year in a very small space. That alone is enough to power 10,000 Model S's or 20,000 Model 3s a year, just from that one small set of production. In about a year, they're going to expand this to the Terafactory in Texas, the Terafactory in Berlin, and a Terafactory in Shanghai. And they're going to start producing these batteries in much, much larger volumes, starting at 200 gigawatt hours each. Well, 200 gigawatt hours is a lot of batteries. They expect, and again, this is where I think they're under-promising. They said their plan is to produce 100 gigawatt hours of these batteries in 2022. That would be enough for 2 million 50 kilowatt hour packs, rough pack size for the Model 3 and the base Model Y. That doesn't include Panasonic, CATL, and LG Chem, all of which are increasing their supply to Tesla.
This is just talking about Tesla internal cell production. As I tweeted out earlier, we will continue to use our cell suppliers, Panasonic and LG and CATL.
So just on the batteries they're producing themselves in 2022, it would be enough for 2 million Model 3s. We only expect them to produce 500,000 vehicles in 2020. If they're going to be able to produce over 2 million vehicles in 2022, that's a monster growth story already, and I think they're understating it. This is huge, huge. One thing I hear people talk about who are concerned about the company's prospects is called the Osborne effect, and it's nonsense. It can make sense in some circumstances, but it's nonsense when it comes to Tesla. The Osborne effect is the idea that this potential for new technology improvements that are coming soon makes consumers hold off on buying now. That somebody's thinking about buying a Tesla Model 3 or Model Y, and they think, wait a minute, you've got these new batteries coming in a couple years, why don't I wait a couple years? And that would make sense if there was a limited amount of demand for Tesla vehicles. But it's irrelevant when demand is much larger than supply. There are people who need a new car, and they're making a decision right now in the next month or so, I need a new car. And what might be available in 2 years really doesn't matter a whole lot because I need a car now. And if the Tesla Model 3 is better than any other option, or the Tesla Model Y is better than any other option they're looking at, and they need a car now, they're buying it now. So if half the market can wait and half can't, and the part that can't wait has more demand than Tesla can make, which is true, then the Osborne effect doesn't matter. So the Osborne effect is not reducing current sales. It's not reducing near future sales. Tesla sells every car they make. They sell every car they make. Period. Demand is effectively unlimited. Tesla EVs are already the best vehicles on the market. If you need to buy now, Tesla is the best choice. Not just me. People like the Wall Street Journal saying it. The Tesla Model Y is the best vehicle on the road today. The Tesla Model S is the best luxury sedan available. The Tesla Model X is the best luxury SUV available. And the Tesla Model 3 is the best compact sedan you can buy, period. If you're in the market for a new vehicle and you pay any attention at all, you're buying a Tesla. So the danger that you might be able to get a better Tesla 2 years from now is irrelevant. Doesn't matter. The biggest thing that could hold Tesla back, and I think they addressed it on Battery Day, the biggest thing that could hold Tesla back is constraints, and in particular the supply chain. While Tesla is doing everything they can to lock down what they do, there's always the danger that they can't get something they need to build what they need to build. Now, they announced at Battery Day that they have locked down a supply of lithium. They arranged a deal where they have the rights to take the lithium out of lithium clays in 10,000 acres of Nevada.
We actually got rights to a lithium clay deposit in Nevada.
Over 10,000 acres.
Over 10,000 acres.
So we're really excited about this, and there really is enough lithium in Nevada alone to electrify the entire U.S. fleet.
And they said that there's enough lithium there to supply basically all North American demand, period. So they don't have a lithium problem. Silicon is going to be key in the new batteries, and silicon is abundant. There's no shortage of silicon. Graphite is important in the other batteries. No shortage of graphite. Those are not a problem. Nickel is the biggest potential constraint. Nickel is the key mineral or the cathode in a lot of Tesla and in a lot of batteries used for electric vehicles, including Tesla electric vehicles. And that's harder to lock down, and Tesla has made it very clear that they are trying to secure large long-term contracts for nickel. And a lot of people think that they're on their way to locking down some contracts so they'll have an ample supply of nickel. They didn't say it at this event, but it sounds like they've got that taken care of too. Iron phosphate is key. No one else seems to be talking about it. I've been talking about iron phosphate like crazy, and Tesla did cover iron phosphate, lithium iron phosphate batteries at Battery Day. And they made it very clear that lithium iron phosphate will be used heavily in grid storage and low-end vehicles. This was something they hinted at before. It shouldn't be a surprise, but everyone is so focused on the new battery cell technology they have that they're ignoring this really important detail.
In order to scale, we really need to make sure that we're not constrained by total nickel availability. At kind of a three-tiered approach to batteries, iron is a little better than it would seem when you look at it at the pack level fully considered. It's not as good as nickel. Nickel is like 50 to 60% better, but it's actually pretty good. And so good for stationary storage and for medium range applications where energy density is not paramount.
Iron phosphate batteries cost less than nickel-based batteries. They cycle well. It means they last longer. It means it's easier to get a 1,000,000-mile battery when you use lithium iron phosphate. It means it's easier to make your grid storage battery last longer when you use lithium iron phosphate. They don't have the energy density, but you don't need energy density for grid storage. And for low-end vehicles, you get enough energy density out of lithium iron phosphate that it's good enough. Not ideal, and nickel-based battery chemistries are better in terms of weight and volume, but it's good enough. Some of the technology they're using to improve the new batteries will also help with lithium iron phosphate, like the vehicle-to-chassis technology that they talked about. Instead of putting batteries in modules in packs, packs in cars, they're going to put the batteries straight in the vehicles and use the batteries themselves to help the structure of the vehicle. And it's going to make the vehicle lighter, and it's going to make the vehicle stronger and more rigid. It's fantastic.
So you're basically making the front and rear of the car as a single piece, and then that interfaces to what we call the structural battery, where the battery for the first time will have dual use. The battery will both have the use as an energy device and as structure. The non-cell portion of the battery has negative mass. So we save so much mass in the rest of the vehicle. We save more mass in the rest of the vehicle than the non-cell portion of the battery. So it's like, well, how do you really minimize the mass of a battery? Make it negative. Make the battery non-cell portion of the battery pack negative.
And they can do that with iron phosphate too. The larger cell size that they demonstrated they're using with the new cells, that's something that already exists with lithium iron phosphate. So they'll probably source lithium iron phosphate batteries that are 54 millimeters in diameter and 80 millimeters in height, just like the new cells they're doing, because that already exists basically with lithium iron phosphate. We're going to see rapid expansion of grid storage and low-end vehicles using lithium iron phosphate. This is an important part of Tesla's growth story. It's not necessarily a big part of the profit story, but it's a big part of the growth story. They'll make some profit from it. Again, Robo-taxi is the big profit, but it's an important part of the short-term growth story, and it's an important part of grid storage and Tesla Energy in particular. What I want to talk about now, the current nickel chemistries. They've been using nickel cobalt aluminum from Panasonic from the Tesla Gigafactory in Nevada. They've added battery supply contracts with LG Chem, I think that's South Korea, and with CATL in China. I think CATL is supplying lithium iron phosphate and maybe other batteries. These suppliers are providing more batteries to Tesla. They're growing their supply to Tesla. So that's an additional source of growth. Even without the new cells and without iron phosphate, Tesla would grow because Panasonic has already added a line. They're already improving their production. They added LG Chem, and now they've added CATL. You're going to see massive, massive growth in battery supply to Tesla, and that means a massive increase in the production of vehicles and grid storage at Tesla. Another thing that was mentioned often in Battery Day that matters to investors in particular is Capex, capital expenditure.
We're not just talking about cost or range. We've got to look at all the facets. Range increase, we're unlocking up to 54% increase in range for our vehicles and energy density for our energy products. 56% reduction in dollars per kilowatt hour at the battery pack level, and a 69% reduction in investment per gigawatt hour, which is the true enabler when we talk back about how do we achieve this scale problem here.
A lot of the improvements they've come up with and how they make these batteries reduces the amount of capital that needs to be spent to developing some aspect of battery technology, of battery production. This is key in two ways. If you can build the factory for less money, it means you spent less. And when you spend money building a factory, the cost that you spent has to be spread over what you produce. So if you build 1 million widgets, you build 1 million cars, you spent $1 billion building the factory, then you spent $1,000 per car on building the factory. If you can reduce what it costs to build the factory from $1 billion to 500 million, then you've reduced the cost per vehicle from $1,000 a car to $500 a car, and that enables you to either make more profit on the car or sell the car for less money. So they're doing two things. One, they're reducing the cost of building the factory, and two, they're increasing the volume of production from the factory. So now instead of using this hypothetical, instead of spending $1 billion to build a factory that builds 1 million cars, they're spending $500 million to build a factory that builds 10 million cars. So instead of spending $1,000 in Capex per car, they're spending $50 in Capex per car. That's an oversimplified example, but that's the idea. Tesla is dramatically reducing the cost of getting things done. They're lowering the cost for building factories. Their higher production rate means they're spreading Capex over more units. And in particular with batteries, what they're expecting is they're going to make a smaller footprint factory that's going to cost less than building the Tesla Nevada Gigafactory and take up less space. They're going to produce at 7 times the volume. So where Tesla Nevada, Giga Nevada is expected to produce 150 gigawatt hours a year, these newer, smaller terafactories are going to produce a terawatt hour a year, about 7 times as many batteries at lower cost. That means the Capex cost of the batteries is dropped by like 90%. I forget the exact number. It was a huge drop in the Capex cost on the batteries. And that translates into lower cost for the vehicle. It means they either make more profit on the vehicle, or it means they're able to sell the vehicle for less money and sell more of them. Okay, so let's talk Robo-taxi. Robo-taxi is probably the most important thing to a Tesla investor besides growth. Maybe it's the most important thing, including growth. Robo-taxi was mentioned only briefly, and that was during the annual meeting.
The value of Tesla is going to be total vehicles produced times the value of autonomy. That's a way to think about the future value of Tesla.
Robo-taxi is the real profit story. Robo-taxi is where Tesla makes ridiculous money on each car that they make. Normally you make a car, you make a $5,000 or $10,000 profit on a car. You make a Robo-taxi, you make $30,000 and you keep it. If Tesla makes a Robo-taxi and they keep it and they run it as a Robo-taxi, they make $30,000 a year profit on that vehicle for 10 years. So instead of making $5,000 or $10,000 profit on one vehicle made, they make $300,000 in profit on one vehicle made. The growth means they make a lot more of them. That's the real profit story. So they're making progress on full self-driving and Robo-taxi. There's something called the foundational rewrite. The original self-driving software hit a wall. It was called a local maximum. It wasn't improving fast enough, and they decided we need to rewrite the software. They rewrote it with something called 4D labeling, which means it will be easier for the software to learn to drive better, faster.
I drive the bleeding edge alpha build of Autopilot. About a couple of years ago, we were kind of stuck in a local maximum. And so we had to do a fundamental rewrite of the entire Autopilot software stack and all of the labeling software as well. We're now labeling in 3D video. This is hugely different from previously where we were labeling essentially a bunch of single images from the 8 cameras, and they would be labeled at different times by different people. And some of the labels, you literally can't tell what it is you're labeling. It basically made it sort of in some cases impossible to label, and the labels had a lot of errors. Now, with our new labeling tools, we label it in video. So we actually label entire video segments, and the system, so you get basically a surround video thing to label, and with the surround video and with time. So it's now taking all cameras simultaneously and looking at how the images change over time and labeling that. And then the sophistication of the neural nets in the car and the overall logic in the car has improved dramatically. We'll hopefully release a private beta of Autopilot, of the full self-driving version of Autopilot in, I think, a month or so, and then people will really understand just the magnitude of the change. It's profound.
The foundational rewrite is going to beta, which means it's going into, it's in Elon's car now in alpha. And Elon and other people at the company are driving the alpha version now. It's going to be going out to other people in what's called a private beta in about a month. It will be feature complete by the end of 2020, or roughly the end of 2020, which means you'll be able to tell the car to drive and it will be able to drive anywhere. You'll still need to supervise it, but it will be capable of driving in any situation by the end of 2020. It won't be perfect, but it will be able to do it. The 4D labeling means it accelerates the machine learning. The March of Nines, the getting the software so that it drives better and better and better and handles more and more situations, more corner cases, more edge cases. That is going to accelerate because of 4D labeling, which is part of the foundational rewrite. That's already going to be in place in about a month, and in every car by the end of the year. Dojo, a supercomputer that will accelerate learning, will be going live in 2021. That's going to massively accelerate the learning. So I have predicted for a while, and I maintain my prediction that Robo-taxi will begin operating by the end of 2021. Robo-taxi profits will begin to start coming into Tesla in 2022, and that will be huge. Huge, huge, huge. If Tesla has 2 or 3 million robo-taxis on the road and they go out and they make $30,000 a year and Tesla gets a third of that money, that's a ridiculous amount of money. It's monster. And that's just the beginning, and it's going to grow rapidly. There's another important detail for investors. There is no competition. We keep seeing stories about the competition is coming, the competition is coming. The media loves to tell you that there's a Tesla killer coming. There is no Tesla killer coming. Tesla makes the best EVs. Nobody is making anything better, and it doesn't really matter. The reason it doesn't matter is that demand is effectively unlimited. There are 1.4 billion internal combustion engine vehicles in the world that need to be replaced. If Tesla manages to achieve the stated goal of producing 20 million vehicles in 2030, that comes nowhere close to replacing 1.4 billion internal combustion engine vehicles. There's plenty of room for other EV makers. There is no competition. There is no Tesla killer. Any successful new electric vehicle is an internal combustion engine killer. They're on the same team. More EVs means less internal combustion engine vehicles, means cleaner air, it means more efficiency, it means we all live better. What this means in terms of investors and the models, the Model Y and the Model 3. The Model Y is already the best car in the world. I'm not saying it, the Wall Street Journal is saying it. The Berlin Model Y, based on what they talked about, will be dramatically better than the current Model Y that's already the best car in the world. It's going to be better. They're going to be making it better. They're going to have a better manufacturing process. It's going to weigh less. It's going to have more range than the current vehicle. It's going to cost less to produce in the current vehicle.
And in addition to the improvements we just said on enabling additional range and improving the structural performance of the vehicle, it is worth another 7% dollar per kilowatt hour reduction at the battery pack level, bringing our total reductions now to 56% dollars per kilowatt hour.
Yeah.
Other Model Y production, including Fremont, Shanghai, and Texas, will adopt these improvements. The Model Y is already the best vehicle, and it's going to get significantly better fast. The Model 3 will adopt these improvements. The Model S and the Model X will probably adopt these improvements. Cybertruck will probably incorporate some of these improvements. Tesla already has the best vehicles, and they're getting better fast. And that means demand will remain unlimited. There's a huge demand for great vehicles. That's not going to stop. One of the other things that happened at the meeting is what I would call the halo car. They mentioned the Plaid Model S. Now, I personally do not think that the Plaid models are that important in terms of the long-term profit story for Tesla. But it is a halo car. The Plaid Model S and the Plaid Roadster, Roadster will always be Plaid, they will be far better in terms of performance than any production car at any price. They announced the Plaid Model S at $135,000, 0 to 60 in under 2 seconds for a production large sports sedan, a quarter mile under 9 seconds. A competitor was just bragging about 9.9 seconds. They're going to do under 9 seconds. 520 miles of range. You can order it now. You'll have it before the end of 2021. It's going to be absolutely amazing. The key detail about Plaid Model S and Roadster is they have a halo effect. They strengthen the Tesla brand, particularly among wealthy male consumers and business owners who like sports cars. I think the Robo-taxi story is the bigger story in terms of profit, but the branding value of Plaid Model S and Roadster is really important. And it's going to make a big difference from an investment perspective, both from a do I want to buy a car from that company and do I want to invest in that company? If they have the best car, I'm more likely to want to invest in that company. Another monster detail they revealed at Battery Day that should matter a lot for investors was they hinted at a future compact Tesla vehicle. This is the second or third time, I think it's the third time that Tesla has hinted at a compact vehicle. There was the China design reference when they did the introduction to selling cars in China. And there was a reference to a Berlin design studio that might design a car in Berlin, that both of those might design compact vehicles. It seems very clear that Tesla is close to announcing a compact vehicle. They said it was going to cost $25,000, then they referred to it as a compact robo-taxi. They are under-promising when they say $25,000. Elon has said before that he thinks they can get the Model 3 down to $25,000. They're going to get this compact robo-taxi down to $20,000 or less. There's fewer parts. It's going to be a very high volume, which reduces the Capex per unit. They're going to have even better improved manufacturing, and they explicitly said that this vehicle will use lithium iron phosphate batteries, which cost less than nickel-based chemistries. This means they're going to have a huge supply of vehicles, and particularly a huge supply of robo-taxis, to satisfy the demand for robo-taxi rides. Whether they're going to sell these vehicles to other people or keep them for themselves, I don't know. I've been an advocate for saying they're going to keep them and hold them for themselves. So what does this mean for investors? Like I said, I don't do short-term price targets or talk about what the price is going to be this week, this month, this year. That's not important to me. What's important to me is what's going to happen in the next 10 years, because I'm 54, I retire in about 10 years, I start accessing my IRA in about 10 years, so my outlook is 10 years from now. I believe that by the time 2030 comes around, Tesla will be a $20 trillion company. The share price is going to go up more than 10x, more than 20x, maybe 50x or more. This story depends to some extent on Robo-taxi, but even without Robo-taxi, I think we're going to see a 20x increase in the value of Tesla as a company. And when you add in Robo-taxi, we're talking 50x or 100x. This is a monster investment. This is a rare opportunity to buy the unicorn that's going to go from nothing to everything. Even though Tesla is already now a large company and would be one of the top companies in the S&P 500 if the S&P 500 was smart enough to include them, Tesla is going to be the largest company in the world. It's going to be larger than the next 3, 4, or 5 companies. It's going to be an absolute monster. So if you are so for me as an investor, I made the choice to buy Tesla, to hold Tesla, and even this week, even this morning, I bought more Tesla because the stock dropped, and basically I had free cash that I didn't anticipate in a couple of my accounts. So I bought some more Tesla. It wasn't a huge chunk compared to what I already own, but I bought a little more Tesla stock. When I find out I have free cash in my accounts, I buy Tesla stock. I'm biased. I am a Elon Musk fan. I'm a SpaceX fan. Tesla fans, Neuralink, boring company. I think Elon Musk is changing the world for the better in so many different ways. The guy's landing orbital rocket boosters. He started landing orbital rocket boosters in 2015, and no one else has even tried yet. They started making the Tesla Model S in 2012, and no one has made a better luxury sedan yet. 8 years later, the 2012 Tesla Model S is better than any is better than any electric vehicle that's made by any other company still. It has longer range, it's more efficient, costs less. It's amazing. So this is a company that is led by a genius, and it has a spectacular team of engineers and people running this company. And I am confident. Everything has risks, but I am confident that this is probably the best bet I have ever made as an investor. I have been rewarded handsomely so far. My cost basis on post-split value is around 65, and the share price is now around 400, so it's done really well for me so far. But I'm expecting 4,000, and I'm expecting 20,000, and I might see 40,000 by 2030. This is a spectacular company. It's a great investment. I am hooked. I can't tell you what to do, but you can tell what I think. So I hope you like this video. I have more videos about Tesla as a stock. Please check my videos here. I'm on Patreon. I really would appreciate your support of me on Patreon. That really helps me make quality videos and encourages me to keep doing what I'm doing. Thank you so much for watching.